Hey guys, welcome back. This is my channel McNallie Money. Today we're going to be taking a look at a company called DropBox. Many of you may have heard of this stock and many of you may already hold this stock. It's been in the news a lot lately and it's benefiting in a big way from work from home. For those of you who are new to the channel, McNallie Money is all about stocks, investments, and personal finance. Before we get into the video, take a second to like and subscribe if you haven't already, and let's jump right in. Okay guys, as promised, today we're talking DropBox. In this video we're going to go over 3 reasons I'm bullish on the company, one thing I think we need to watch out for, and how I'm currently trading this stock. Before we get in, I wanted to give a quick update on what the company does. As you can see here on their website, DropBox is a leading global collaboration platform transforming the way people and teams work together. At DropBox, they're on a mission to unleash the world's creativity by designing a more enlightened way of working. Essentially what they do is cloud file storage and sharing collaboration platforms. In 2019, they had 1.7 billion in revenue, over 600 million registered users, 15 million of which are paying customers, and 180 countries worldwide. Obviously, this is a large cap company, but I think there's still some value to be found. So first off, we're going to get into the overall numbers here. The thing I wanted to point out on this slide is the market cap specifically. So the stock trades just under $22 today. It has had a little bit of a pullback here. It was up close to 25 earlier in December, and it's now come back down in that $21, $22 range. If you look at the market cap, $9 billion, we'll talk about this again in a little bit, but I think this is important and definitely noteworthy. Company currently does not pay a dividend, and if we pull up a 5-year chart, you can see that it's actually traded pretty flat for at least the last 3 to 4 years. If we look back to December of 2018, we were within $1.50 of today's share price. So to start with, the 3 reasons I like this company, we alluded to the first. Number 1 is obviously price related, and specifically it's price in relation to business model and revenue growth. So if we now jump over to the company's investor presentation, which we've talked about in previous videos and is a great source of information, you can see here in the financial highlights, the revenue has been growing 14%. Actually was closer to 20 in previous years, but now around 15% year over year, with revenues jumping from 1.1 to 1.4 to 1.7 in 2019. You can see obviously operating income is going up hand in hand, and if we take a look at the average revenue per user, you can see this is up about $6 year over year, which is excellent. That shows the company provides value to its customers and people are willing to pay more each year for their services. Now, if we take a look at the business model itself, the reason I'm so bullish on this company, not only are they growing, not only has their share price not moved a lot in the last couple of years, but the model itself is built on recurring subscription type revenue. So you can see here on their company, on their company website, we've got 3 different levels of membership: professional, standard, and advanced. Then you can also move up to an enterprise package. Either one of these obviously depends on the kind of customer that you are, but the base thing to remember here is they're all subscription based and the company can count on this revenue month after month. Now, we talked about in the opening slide about 600 million users. Currently there's about 15 million of these that are active paying customers. The nice thing there is it's a diversified customer base, and if they lose one account, it's not going to hurt the company overall. Now, as a side note, if we open up Glassdoor and take a look at the overall company rating, you can see here 81% of employees would recommend DropBox to a friend and 85% approve of the CEO's direction. While this isn't necessarily a decision maker for me, I always like to take a look in here and see if the people working at the company are bought into the overall vision. Okay, so let's jump into reason number 2 I'm bullish on this company. Back in January of 2019, DropBox actually acquired HelloSign for $230 million. Now, for those of you who don't know, HelloSign is a legally binding e-sign application similar to a DocuSign or an Adobe Sign. Now, the reason I like this is obviously this market is growing at a tremendous pace, especially in light of the COVID situation and work from home. However, the share price of DropBox really hasn't reflected this. Now, at the time of acquisition, HelloSign had about 80,000 customers. Since then, Dropbox has now integrated this as their standard e-signature application in all Dropbox applications, and has also integrated to some major third-party vendors such as Salesforce. Now obviously these aren't the only companies in this space, but HelloSign and Dropbox are definitely two of the bigger names. If we take a look at the HelloSign model itself, very similar to Dropbox. So there is a free option, 3 signatures a month, which is very casual users, but then it goes up from there. So essentials, business, and enterprise level again. Once again, we talk about recurring revenue, and I think this is a very strong business model and very exciting as we look forward into the world of work from home and e-signature. Now, if we take a look at some of the competitors, you can see here that by no means are there only 2 names in this space. There's PandaDoc, HelloSign, SignEasy, Adobe, SignNow, SignRequest, EverSign, and then obviously DocuSign is the main player. The reason I wanted to bring this up is just to show the size of this market. Now, aside from all the e-signature companies, you need to remember that there's still the majority of signatures collected traditionally. Now, if we take a look at DocuSign, who's the main competitor in this space, you can see they have a market cap just under 48 billion. Now, we talked at the start of the video about Dropbox having a market cap of just under 9 billion. So let's for a second pretend that DocuSign owns the entire e-signature business, and that environment is not going to go up over the next few years. I know this is a hypothetical, but just stay with me here. So if, for example, they're valuing DocuSign at 48 billion as the entire addressable market, that means if HelloSign is able to take 18% of that market away from DocuSign, that would offset the entire $9 billion market cap of Dropbox. So think for a second. DocuSign is one player out of many in an environment that's still growing, and as mentioned, there's still the majority of signatures being collected traditionally. Now, the third and final reason I'm so bullish on Dropbox has to do with their balance sheet. If you take a look here, again on Yahoo Finance, you can see they've grown from about 400 million in cash 2 years ago to over 1.1 billion at the end of 2019. So if you look at a market cap of about 9 billion, that means 12% of their market cap is sitting in cash, which is absolutely phenomenal for a tech company like this and gives them a lot of flexibility and options down the road. So for that reason, for those 3 reasons, I am extremely bullish on this company, and it is one that I'm actively adding through shares and options in my personal account. Now, at the start of the video, I did say we were going to look at one thing I wanted to watch out for, and that has to do with the competitive landscape of their core business. With the recent surge of work from home, obviously file sharing and collaboration are at the top of every company's mind. Because of that demand, obviously new competitors have entered this space, and they're now competing with some of the likes of the big tech companies. So obviously there's Dropbox here. We also have Google Drive, Amazon, Box, and Slack as the primary competitors of this company. Now each of them offers slightly different things. A lot of them are subscription based, but at the end of the day, Dropbox has the first mover advantage, and a lot of these companies have tried previously to get into this space and just haven't been able to master it. And I think that's why you see the growth rates of Dropbox and the recurring subscriber base plus user growth year over year. So to end off the video, I did want to show everyone how I'm currently trading this stock. As mentioned, I own shares as well as call options in this name. So in this account here, I have about 70 shares. I own an additional 230 in a joint account with my wife. So we're sitting on about 300 shares of the Dropbox worth about $6,000. In addition to the shares, I do have 2 option plays out right now. One which expires July 16th with a $21 strike, and one that expires in January of 2022 with an $18 strike. I'm feeling really good about this position, and the more I talk about the company, the more I want to add money. So in all likelihood, I will be adding to these option strategies, probably the January 2022, just to give myself a little more time. To wrap up the video, you guys, I think this is a stock that's definitely worth taking a look at. There's a lot of catalysts for this industry, especially as work from home becomes the new norm. And with the addition of HelloSign, I think this company is poised for some big growth. Hope you enjoyed today's video. Have a great day and remember to hit the thumbs up.